Hello everyone and welcome back. My name is Greg Furman and these are the market positions for August the 9th, 2017. Now our first trade for tonight is going to be again in the Forex market. We're looking at the dollar-yen currency pair. Now what we can assess here is that after a pretty solid non-farm payroll number, not the best payroll number, but a good one that still had very little effect on the dollar-yen pair. We've retraced back to the VantagePoint 18-day predicted moving average, which is now currently coming in at 111.07, and we've had a significant failure yet again. We've come back and tried to retest this level, each time failing. Now, after the initial signal from VantagePoint to sell this particular pair, you can see that again we've had multiple retracements to this critical VantagePoint 18-day predicted moving average, only for the market to fail. Now, our neural index, despite that surge in the dollar-yen pair after the non-farm payroll and prior to the non-farm payroll, the neural index remains steadfast that this pair is going lower. That, of course, has come to fruition. Very good call there from VantagePoint. Now our predicted MACD has crossed to the zero line, to the downside. Nothing has changed there either, and as we've approached back towards the 40 level on the predicted RSI, we've had a significant failure there also. So when we combine all of these indicators together, it doesn't really make a whole lot of sense to be buying this pair, but rather sell rallies. Now when we check our individual crossovers, our short term is turned back down, but our medium term crossover has told us to stay short this entire time, as is the long term crossover. Now my only concern with this is we are approaching a lower trend line support, and essentially, in my respectful opinion, nothing goes straight up and nothing goes straight down. So we've had, usually this runs about 15-18 days in both directions, so we potentially could be coming to the end of this particular rally to the downside, but again, the dollar remains quite weak, and I think we still have a little bit more downside. So when we bring all of this together, guys, from here, all we have to do is go in and utilize that all-important daily report from VantagePoint to help fine-tune tomorrow's entry. We know that critical level, the 18-day predicted moving average, is sitting at 111.02. For tomorrow, we're looking for a retracement. Basically, I feel that 110.59 may be a little bit thin, so we're going to set the short position between 110.59 for your more aggressive traders. Your less aggressive traders, you can wait and see if the market can pull back towards the 111.02 area, that critical 18-day predicted moving average. Now in that particular case, we want to make sure that our stops are about 50 to 60 pips above that 18-day predicted moving average. We do not want to get stopped out anywhere in between. So if we bring that back up, just to remind everybody where that critical level is, we can see that this level is 111.07. So we would put stops at just above 111.50 on a very minimum basis, but I would allow for probably 112.02 or so on the stops on that. Now our second trade for tonight is going to be in the U.S. Energy Sector. What we're looking at here is the EnCana, the ECA stock, Now what we're looking at is again buying this pair. We seem to have found some pretty decent support here between the trend line support right here that I've drawn in and that critical VantagePoint 18-day predicted moving average coming in at 971. Now we've closed at 979, so it's not overly bullish, but it is recovering. Our neural index is turned higher. Our predicted short, medium, and long-term differences are starting to turn back to the upside, and the predicted MACD is holding firmly above the zero line. Now, with our predicted RSI, we're holding above 50, but what we're really looking for is a break above the 60 level. Now, you can see a very similar signal here on that triple EMA cross to the upside. We combine that with our neural index. There's a check mark there. Our predicted differences, we've got a predicted MACD crossing over, and then the break of the 60 level. So when we combine all of these indicators together, it's telling me that we're probably getting ready to go higher on this particular stock yet again. Now, the individual crossovers, again, they are tricky, but we do need to check them. Our short term is crossing back to the upside off of this trend line support that I've drawn in. Our medium term is still down and our long term is still down, but they're turning back to the upside. So this move right now appears to be corrective in nature based around the VantagePoint indicators. So once again here, guys, all we have to do is go into that all-important daily report. You'll notice that that is never my first step. It is always my last. When we look at the close of 989 for tomorrow, we're looking for a minor pullback to 965. We're then going to target 1008. So a 40-cent move, 50-cent move, and a $9 stock here, guys, is a very, very good return. So what we're actually looking for is a return to test this upper trend line at 1050. If we can break that area, then that will open the door back to the 1150 mark. Now, when we look at this stock over the last 6 months, it's been choppy, but it's been as high as $13 per share. We've been trading that here. And we always look for repetitive moves to go back to stocks that basically run in repetitive cycles. And this does look to be a repetitive cycle. So all we're doing now is waiting to catch the next move back to the upside.